Akshaya Tritiya, and compliments of the season to you if you're tuning in, is what are people doing with gold, and what should you do in terms of your investments with gold? Navneet Damani, who's a Group Senior Vice President and Head of Commodities Research at Motilal Oswal, joining us to talk about the latter, and to talk about the former, of course, we have Saurabh Gadgil, who's the Chairman and Managing Director of P&G Jewellers. Since it is Akshaya Tritiya, let me go to you first, Navneet, on what your anticipation is, what you've seen in recent festivals, and the tendency, from what we found out, of buyers coming to stores, exchanging jewelries and buying lighter. Is that something that you're anticipating? What are the volumes that you expect will come through this festive season?
Well, thank you for having me on the show. We've seen a sizable run-up in gold prices. As you mentioned previously, it's about 25% year-to-date returns just in the last 4 months. And as we speak, it's pretty volatile. Every alternate day, you're seeing about 1,500 points movement in gold. This is something unlike what gold is likely perceived as an asset class. It's typically a safe haven asset class, and today it's more of a financial asset than a safe haven asset. So there is enough and more demand for gold even at every price point, and people are just waiting for a reasonable correction to gather it once again, because this in the last 5 years have delivered a better return than any other asset class which most of the people are investing into. Now, what is going to be the demand for Akshaya Tritiya? I think Mr. Gadgil will be able to tell you better, as he owns a jewelry store and probably a chain of jewelry stores. But I think the ground level research that we've done, typically the footfalls are lower. And there is more of cannibalization between gold to silver at this point in time. People are preferring lower caratage of gold, or probably waiting for silver as an investment, because that is not caught up significantly as far as gold is concerned. And I think price point wise, we are about 4% or 4.5% away from lifetime highs. Better levels will be anticipated, and there are a dearth of people waiting on the sidelines for any correction to enter into this metal at a lower price point.
Right. I mean, Navneet, good morning, and Saurabh, good morning as well. I think, Alex meant to ask that question to Saurabh, and he just said Navneet. But Saurabh, let me take that with you as well. How are you looking at it in terms of the demand? If you have to compare the last couple of years, are you seeing the mood come off, taking into consideration higher pricing, and that in turn impacting volumes?
Yeah, good morning and wishing everyone a happy Akshaya Tritiya. Like Navneet said, right now, prices are at an all-time high. There's been huge appreciation in gold. But having said that, people's interest in gold as an investment, as a store of wealth is very strong. Yes, we have seen a lot of people swapping old gold for new jewelry. So primarily wedding shopping is almost today 50% the currency is old gold, and that is what people are preferring today because of the high prices and due to that the budget constraints. But in between there were a lot of fears on gold seeing a huge correction and gold could see a big downfall, but that has not happened, and that again has reinforced people's faith that looking at the geopolitical situations around the world, gold seems to be an asset which will be in a bullish mode, and that has really seen people coming and entering the gold market physically. There's been no selling pressure, and people are buying gold. Quantity has been a little struggle because of people's budget, but in value-wise, will be 30-35% more. So Akshaya Tritiya, I think value-wise, the industry should be aiming for a 20-25% hike over last year. In terms of volumes, I think we could see a dip, maybe a single-digit dip, around 8-9%. But the sentiments are bullish. Today is a whole day of Akshaya Tritiya, right from morning 8 o'clock till midnight is the Muhurat. So, we see a lot of, pent-up demand being converted today. Bookings have been moderate. I would not say there have been super bookings, but bookings have been quite decent. And people interest in the festival, in Akshaya Tritiya, as a part of this Sadeti Muhurat is reinforced again. So we're hoping for a good day of sales as we progress today.
Point made, Saurabh. And thanks for answering the question that I originally asked. Navneet, and to you, you fielded it quite well. Even though the question was not intended for you. But let me ask you this then, because you've seen a little bit of a cool off in gold prices from those elevated levels of close to 2,500 rather 3,500. See, there you go. The numbers have moved so quickly that I'm talking about 2,500 still. But $3,500 in the international market. Where do we go from here? Because a lot of people talking about gold-silver ratio, but that's not panning out. And while you have trade tensions, they've dissipated somewhat. So does that come into play? Dollar has remained below 100, stays at 99. If that does move above 100, is that the biggest risk factor for gold?
Well, there are a lot of risk factors as we speak. Primarily, it's largely driven by a trade war situation between China and US, and the tariff imposition on each other has kind of taken the center stage. Demand side story continues to remain as it is, but the supply side story is pretty robust, but the demand side scenario has changed drastically, largely because. Now, what has happened? You see dollar index correcting from 106 levels to 98 levels within a span of no time. And the so-called cuts in interest rate, which the US was talking about, seems to be a far-fetched at this point in time, because these kind of tariff is going to lead to higher inflation, slower growth, and eventually the postponement of rate cuts is likely to happen. So all in all, this scenario is not likely to play well, neither for US nor for China. And both of these biggies have to come on the table and probably settle out their issues, because China is in a phase of recovery over the last 4 years since the COVID, and US also is not in a great state. The 10-year GSEC is also a very interesting number, where it was down to about 3.6, 3.7%, and now shot up to 4.3%. Primarily, US is sitting on a 36 trillion debt, and to service this debt at a 4.3, 4.4% kind of a yield is going to be a very, very massive task for the US Treasury. So I think this is a matter of time when these trade-related tensions are going to come at a standstill, and maybe the prices are likely to kind of stay where they are, or at least cool off.
So,
Now,
so
talking
Navneet,
about
Navneet, when you talk about prices cooling off, what's the potential that one should be watching out for? How much downtick from the current levels?
well, we don't have a number in place, primarily because every now and then you see the statement keeps on changing very
Yeah, but we can have a
significantly,
range,
and
right?
kind of $100. Yeah. So that's what I'm coming to. We as a broking house, and as we expect that anything closer to 3,200 and 3,150 is a level where you will see buying interest come once again. On the domestic front, if I say about 91,000 is a level where we expect that buying interest will be very massively into gold. But we also spoke about the gold to silver ratio. Historically, we've seen that it is only two instances gold to silver ratio has sustained above 100 level for a brief period of time, once during COVID and once during 1980s. As we speak, it is around 102, 103. We expect that this ratio has placed its hand, and maybe it's time for now silver to outperform gold, and this ratio can have some skewness back to about 1992 levels once again.
Okay, so then as a house, while you're not giving targets on gold at this junction, that's understandable, Navneet. Would you say that the advice right now that you're dispensing is perhaps book some profits if you can in gold, if you've got the ability to? And I'm talking about primarily people who are investing in ETFs. And would you say that it makes sense at this juncture with silver having underperformed in a big way? And if I'm not mistaken, 1 year performance or 6 months performance, I think silver was down 2% last I checked. I'm not sure what the current value is, but would you say that there's a trade in silver?
So in the year 2024, silver gave you about 34% kind of returns, while gold gave you about 31% kind of return. For the year 2025, for the last 4 months, silver has underperformed, whereas gold has rallied very significantly. Now, there is definitely a trade where we expect that silver could eventually catch up, and the rally could extend to 110 and 125, 1,25,000 rupees per kg for silver over the next 12 to 18 months. Now, gold, we have definitely have a target of 1,01,000 rupees as a target, and maybe $3,800 as a target. But buying comfort is not at the current price. We expect that if an investor has to invest, it has to be a better price. If it's a tactical investment, one should look to stay away from gold. But if it's a long-term investment, you have to definitely park some money, then wait for a price correction of about 5%, where your risk and reward will be favorable to enter and maybe garner about 15% returns over the next 2 years.
Thanks, Navneet. Saurabh, running short of time, we just have a minute. Very quickly, is the retail growth lower as compared to the growth you're seeing in gold prices? And in terms of the old gold exchange, how much is that contributing, just to get us an idea?
retail growth in terms of value is more than the gold price appreciation. I think retail growth in value term would be around 30%, which I think is quite good considering the entire market scenario. People are looking at gold as a currency to buy new jewelry, and that today is around 50-55% of the entire sales. So that typically was in the range of 18-20%, which has gone up to 55%. And I think that's primarily because of the high prices and people's budget constraints. But having said that, people are buying jewelry. Wedding shopping is going strong. Diamonds have seen a good run as we speak. And I think overall people's interest in jewelry remains strong. Silver and gold, I beg to differ, do not compete because silver to hold physically is very difficult.
Yeah.
So the silver physical buying is very different than gold physical buying. And these markets both coexist. So I think overall things are looking good for the industry as we speak. All around, just the data has come from World Gold Council, where India has been the largest importer of gold last year. So that really speaks on the India's volume consumption.
Absolutely.
And I think things as we go ahead look the same. So let's all hope that this Akshaya Tritiya and the coming year should be a good year for the industry.
Absolutely. Hoping for the same as well, because we'll wait for all of us and our husbands and wives to buy each other gold and jewelry for our investments as well. But thank you, Saurabh. Thank you, Navneet, so much for joining us on the show. And all the husbands who are listening as well. I think, Saurabh is promoting purchase of jewelry.